Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. It's going to be Landon Swan, co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to see you. Good to be here.
All right. So Nike down nearly 20% so far this year. It's bounced about $19 off of those lows we saw a few months ago. But we've seen some deterioration in sales, maybe direct-to-consumer falling off a little bit, lack of innovation. I mean, do you guys have the data that kind of supports the weakness that we're seeing? Because the bar's pretty low going into this report tonight.
You know, I'd argue that maybe, I mean, it's kind of low, but it's kind of not, because if you look at what happened with the, the last earnings report, they got smashed. I think they were trading around like 94. They went immediately down to 75. It dipped as low as 70. And now we're back up to around 89. So basically almost where we were before the last earnings report. So, what information has changed since then? I mean, we've got the report. So now, we've got some other numbers coming in maybe, and some speculation, but nothing from Nike. So I would argue that the expectations are actually a little bit higher than you might expect, because yes, all this bad news came in. They said that they're expecting sales to drop 10%. They said the demand's weak in China. They gave us a lot of bad news, a lot of reasons to sell the stock, and people did. But now the stock has been bought back up to almost those same levels pre-report. So, what is it that's going to justify that move, I think, is the question that we have to ask. And, one of the stories that I find so interesting is, you can, if you go back and look at all the times we talked about Foot Locker, how many times do we say Nike direct to consumer is going to kill Foot Locker? They're going to go in right around them. Direct to consumer, Nike's focusing on that. And now they're starting to pull back from that a little bit, because the strategy is to pull back a little bit because, frankly, it's not working. A quarter ago, their website visits were down about 7% on a year-over-year basis. That was a quarter ago. Today, they're down about 22% on a year-over-year basis. So that's taking out seasonality. That's just showing us that the website is not getting the hits that would be required for a successful D2C conversion or D2C strategy. And they're talking about more focus on innovation in some of their product line, which I think they need. But I think definitely they're seeing that this strategy of direct-to-consumer is, I don't know if failing is the right word, but it's just not doing what they thought it would do. And so they're shifting their focus a little bit. We know the Converse is weaker as well. And you can see here, that's one of their brands, but you can see here just when you look at, how other companies are doing, Nike is on the wrong side of this list. And, the shoes side of it, you got On Cloud and Hoka doing really well. On the athleisure side of it, you got Lululemon, Viore doing really well. And Nike's just not doing well. And so what's interesting is, anytime you talk about behemoths in the industry, they're huge. They're this enormous target for the competition, but they've got such a lead. They feel invincible. But when you kind of look at it as, Hoka and On Cloud, for example, they're taking on the shoe side of things, right? Viore, Lululemon, they're taking on the more the clothing side of things. So Nike's, they do a lot, and they don't have a big competitor that's going to try to replicate everything that they do. But there's a lot of smaller competitors that are very focused and specific on the different niches that they're attacking, and together they can really harm one of these big companies. So I think that's kind of what we're seeing with Nike. They talked a lot about trying to streamline operations. I know that they bet big on the Olympics. They thought that would be a big bump for their brand. We measured it. Really didn't see a big uptick, frankly, from their exposure on the Olympics. So I think that right now, my take on it is the data is not great. It's accelerating to the downside when it comes to web visits and happiness, for that matter. And so with the rise in stock price, I think it's setting up for a potential disappointment for investors, even though a lot of the bad news should be baked in. That price move from 70 to 89 tells me that investors maybe are a little more optimistic than they were immediately after the report came out 3 months ago.
Landon, the move in the stock the last few weeks, it feels to me like suddenly Nike's a China proxy, because all these China stocks that have rallied took Nike with it. The numbers that they're putting out, like you mentioned, historically bad without some type of an event. Earnings per share down 45%. Operating income down 45%. Revenue down 10%. These are historic numbers, never happened before without some type of a stoppage or event that made them happen. Here's what everyone's betting on. Elliott Hill, the new CEO, who has an intimate knowledge of Nike. He doesn't come in saying, oh, I've got to get to know the company. He knows it intimately, what the problems are, and they think he can fix it. Now, the real problem is China's still a problem. It's 15% of their revenue. And that doesn't, even though they're stimulating China as much as possible, there's no guarantees that that'll work. Your graph that you showed about the positives and negatives, boy, my closet is full of all the negatives. I don't have one of the positives. I have nothing but the negatives. So I'm clearly on the wrong side of this trade from a consumer standpoint. But what do you think about my theory? Is this a China play? Did this stock rally because of a China proxy?
It may have. I think the betting on the new CEO coming out of retirement, I think that may have been a big part of it. Talk about how, demand in China is weaker right now in their last earnings report. So, but I hear you as far as proxy and everyone else is kind of trading that way. I can see that. I can see the new CEO being a bit of an optimistic reason to buy the stock. And I think it's going to be interesting to see just how he handles this earnings report. I mean, if he comes out very confident and there's decent numbers kind of matching what they said before, but slightly trending to the better side of that, then yeah, I think that the investors are going to like that. But the problem is, again, in the data that we have, and that's what I have to go by, is everything looks pretty weak. Again, that web data moving from -7 to -22 in just a quarter, that tells me that it's really accelerating to the wrong way. And direct to consumer is such a dream as an investor for this company, right? Cut out the middleman, make a lot more higher margins on every sale that you do. And for that to not really work out as well as they'd hoped, that's really disappointing as an investor. So I think that they have a lot to overcome when it comes to just the numbers and the facts of the situation. Now, they can talk about, optimism and what may be, change of direction, innovation, all of that, cutting costs. And maybe that'll go over well with investors. But I just think that the expectations are starting to ramp up pretty high. And, based on the data that we see, web visits and happiness as well, there's a lot of unhappy people with Nike around the whole Caitlin Clark thing. I can get into that if you want, but overall, it's just they're not happy, and it's starting to spill over into the company brand wide. So I'm concerned. I'd be betting to the downside just based on this run up. Tells me high expectations, but the data says it's nothing there to back it up.
Yeah, I think they're getting a little bit of benefit of the doubt since that 30-year plus Nike veteran Elliott Hill is coming back as CEO, replacing John Donahoe, who's kind of made a mess of things at this point, Landon. So you guys are bearish on this one just because it's almost filled that gap here. But what if this is like a kitchen sink type quarter where Elliott, he comes in, Elliott Hill, and says, hey, we're throwing everything out. We're redoing it. We're re-innovating. We're not going to release mass amounts of these shoes. We're going to make them wanted. And then what if China recovers? Is that the bullish scenario in this earnings?
Yeah, I mean, if the play is the Hill, then and that's the bet, then he does something like that, then that's going to reinforce all of those bullish bets that have been made over the last 3 months, and those people are going to be firm in their holding, and then more people are going to jump in. So I think it's really, I guess what I'm saying is, when it comes to just this quarter, it's very clearly bearish on the data, right? The data's not great and the stocks run up. So that's very clearly bearish. I think it has to, the only way that this stock does well on this earnings report is in messaging or change about the future. So if this is not just here's what happened last 3 months, and here we go, there's the numbers, I think that is a clearly bearish signal. But if it's all about the future and here's how we're going to change things, kitchen sink, as you say, then that could totally outshine or outweigh all of the numbers, and then it could be a positive reaction from the market. So it's kind of tough because everything that we have is based on data, and then there's this X factor coming in, and it's kind of like when Tesla reports and Elon Musk takes the stage. You're like, well, he's probably going to spin this well. I don't know if Hill's going to do that, but there's definitely a lot of optimism surrounding him. So that is the X factor in this, and I don't have data on it, but I'm going with the numbers, and we'll see if he proves me wrong for investors' sake. I hope he does.
All right, great stuff, great data as always, Landon. Appreciate it.
Thanks, guys.
All right, Kev, we got option market pricing about a $6.50 move. I mean, I get what he's saying.
Oh,
It's
sure.